The Centers for Medicare and Medicaid Services has sent a letter to the states compiling recent changes that impact how MAGI is calculated. We'll review what that MAGI, or the Modified Adjusted Gross Income calculation, looks like. But let's pay attention to this letter that was sent August 22nd to all of the state departments of health services across the United States, explaining legislative changes that have impacted both Medicaid and the Children's Health Insurance Program, but also impacts the marketplace because of legislation such as the Jobs Act of 2017, the Budget Act of 2018, and the Healthy Kids Act of 2018. This is legislation that has made some tweaks to what counts as income and what counts as a deduction when you're going through not only your taxes, but also your application for different healthcare programs. It's not effective yet. So even though a lot of this legislation says that some of these changes have an implementation date of January 1st, 2018 or January 1st, 2019, the states still need time to actually update their application forms, their eligibility rules, and in a lot of cases, their software programs. So we're going to review what some of the changes look like, but keep in mind, this isn't the rule yet. Keep using the existing modified adjusted gross income calculations until you hear otherwise from your state. So let's take a quick refresher look at what MAGI means. Modified adjusted gross income is a calculation of gross income that was created by the Affordable Care Act as a way to simplify how we count income. Now, it is a complicated equation, but it does really simplify things. If you think of the hodgepodge of the ways income was calculated across all 50 states before the Affordable Care Act, it tried to bring some unity to that income calculation across the 50 states. It also makes the income calculation look a lot more similar to the way you see it on your taxes. So that, again, was a simplification test. You're really following a lot of the rules that look like adjusted gross income, or that AGI number that you put on your tax return, with a couple little tweaks. So let's take a look at what some of those tweaks are. And we put the equation up here where you can see MAGI is really the adjusted gross income minus some deductions with then some additional income items added back in. And what counts as income and what counts as deductions is important. Let's review what it is now, and then we'll give you a little preview of what some of those changes in those legislative acts looks like. Step one, you start with your adjusted gross income calculation, which pulls your income from things like wages, salaries, tips. If you have an annuity or IRA, business or farm income, you're going to start with that number. Then you're going to subtract out some deductions, some things like the deductible part of self-employment tax, or if you have health insurance or health savings account deductions, you're going to subtract that from your gross income, and then you're going to add a few items back in, such as taxable interest or Social Security benefits, and we're talking SSDI here, not SSI. That's the general equation of MAGI. So what's new? Well, that letter that came on August 22nd reminded the states that, first of all, there is a new tax filing threshold. This is for the 2018 taxes filed in 2019. Standard deductions went up for single individuals and for married couples filing jointly. That higher thresholds means fewer people will actually need to file their taxes and fewer will need to itemize. When we start looking at some of the income counted and income deducted, the first area that has the biggest change is in alimony. The old rule was that the spouse who paid the alimony would deduct those payments, and the spouse receiving alimony included it as taxable income. Now that is changed. The new rule is that it is not deducted by the payer, it is not included as income by the recipient. This is for any separation or divorce agreement that is dated January 1st, 2019 moving forward. If you have an earlier divorce decree, you use the old rules. So even though, remember, states don't have this implemented yet, so keep using the old rules until you hear otherwise from your state. But no, once your state implements the change, then it's going to look at that effective date of January 1st, 2019 moving forward for when that income will be counted differently. Here's a separate note. We are not talking about child support here. We are only talking about alimony or spousal support payments being treated differently. Child support remains unchanged. It is not included in the income of the recipient. Let's look at another change that came out of some of that legislation. The old rule for tuition and fees was that the payment of tuition and fees for a qualified education expense was allowed. It was allowed up to $4,000. The new rule is that it is no longer deductible. That has an effective date of January 1st, 2018, once states make it effective. Note, this is separate from that exclusion from MAGI of things like scholarships or awards. It is only impacting tuition and fees that are considered qualified education expenses. There is no longer a deduction for those items. Discharged student loan debt, there is a lot of comment on this coming out of CMS. It largely remains unchanged, where the student loan debt that is discharged, forgiven, or canceled is treated as taxable income to the borrower. There is one exception that was made, and they made this a little bit more clear by saying that if the student loan debt is forgiven due to the death or disability of the student, it is no longer included as income. Now, this would be for taxable years 2018 through 2025 when this rule sunsets. Let's look at another change, moving expenses. Moving expenses, including expenses incurred by the individual and or reimbursements by an employer, are no longer deducted in calculating MAGI. And this again is a provision that sunsets by 2025. There is one exception carved out, and that is for active duty military. Now, the last change we'll touch on, and there were a few others in the memo coming out of CMS, but the last one we're going to touch on is counting lottery or gambling winnings, and this is actually where CMS spent most of their time explaining the changes. The old rule generally was that if you had non-recurring income received as a lump sum, it generally was counted only in the month it was received, and that, of course, is if it was considered taxable income at that time. So if you had a lottery or gambling winnings, it was counted as a lump sum in the month it was received. The new rule actually looks at how much you're actually winning in your gambling or lottery wins. If it again is taxable, there's a new $80,000 threshold for what is considered a lump sum in the month it's received. If it's any larger than that, they're going to spread it out over a couple months, and they actually include a table with calculations for how to count that income. It doesn't come up that much, but they wanted to make it really clear how they were counting it. So let's take a quick look at that timeline. Like we said, this was a CMS letter sent to states on August 22nd. It does have dates of rule changes indicated in those original acts, like the Healthy Kids Act of 2018. However, states will need time to implement their changes. They might have to update some of their computer systems, some of their software, some of their application forms. It's not clear how quickly they can get that done, but they are to be sending notices to their members when they do have those changes implemented. It is not yet clear how this will impact open enrollment for the Affordable Care Act, which starts November 1st. We will keep you posted here as we learn more. In the meantime, you can read that letter from CMS and look at some of those attached schedules that break down some of those income and deduction sources. You can also learn a little bit more on MAGI itself and what the rules are now. And again, keep following those current rules until you hear otherwise. If you like this video, you can hit the like button and subscribe to stay up to date on other current events.